Hello, welcome everyone. Welcome to our podcast. Today's topic will be fast-growing Southwest Florida market. And anyway, my name is Seewing Yee from the Yee Real Estate Network, and my special guest is Mr. Justin Zawodny, our Southwest Florida, Cape Coral, and surrounding market network consultant. And welcome, Justin. Appreciate your time. You're very, very busy and writing contracts and doing very well in your market. And you've been part of our network for a while now, for several years, and opportunities continue to happen. And just briefly, I purchased my first rental property way back in 2004, almost 20 years ago in Cape Coral. As a matter of fact, I bought it for a 4-bedroom, 3-bath for $239K, I remember. So if we fast forward today, just goes to show you the power of long-term investing. So that property have more than double in value over the years. So just goes to show you, as a risk investor, you need to focus on your goals, invest for the long term, and everything will be fine. So I know Justin has been doing very good for our investors, and that the key is finding the right market in Southwest Florida. We talk about suburban growth. We talk about the path of growth going into inland. So you got to be ahead of the game. You got to be ahead of everybody. And since Justin knows the local market so well, he can identify the specific neighborhood, the specific sub-market to pull the trigger, and he has done all the research. So he's the he's the person on the ground. He knows everything and represent our out-of-state investors, so you can make your out-of-state turnkey investing experience hassle-free. So today's market is very interesting, and I'm gonna have Justin to share that with you. So without further ado, Justin Zawodny, go ahead and share to everyone else what specific market, what specific city in Southwest Florida we are promoting on today's presentation. Thank you very much.
Yeah, thanks, Mr. Yee. And give me just a moment, we'll share my PowerPoint here. Let's see. All right, I hope everyone can see this here. We got a map of Southwest Florida to start. As you know, if you've been watching the webinars that I've been doing with Mr. Yee over the years, we have been very, very high, very, had very good feelings about the Cape Coral market. And it's done really, really well for quite a number of investors from the Yee Real Estate Network. I mean, values have gone up over $100,000 from the first home that we purchased in that market. I mean, rental rates have gone up by 30-40% over that time. We've done really well. But the same way when we started doing these webinars, we were very strong about the Cape Coral market. You always have to read and react to what's happening in the market. And one thing that's happened is Cape Coral, it's starting to become a little bit saturated with rental properties. We're finding there's a lot of rental properties available. It's been showing up on a lot of lists nationally of the top 10 markets to invest in, and people have followed suit and done so. So one thing that we've noticed, seeing as we do manage homes across all of Southwest Florida, is that there's another market that's really kind of on the opposite end. There's a ton of rental demand and nothing to rent, and that's Labelle, Florida. So I'm actually gonna see if I can move us to the bottom here. There we go. So Labelle is up here. It's in Hendry County, so one county to the east of Lee County, where Cape Coral and Lehigh Acres are. And it's got a fairly small neighborhood. Probably 10,000 homes or so will be there eventually. Right now, it's still far below that. And it's a really, really excellent market. We'll talk a little bit about why here in a second. Let's see if we can go. Here we go. So we have two different types of homes that are available in Labelle right now. First, it's a 3-bedroom, 2-bath home. You can see the outside here. 1389 square feet. They currently have them available from 270,000 and up. There's one ready as soon as August. So buy now and close within the next 30 days. Rents for this home are $1,900 a month, and they're offering quite a bit of incentives from the builder. It's also a 4-bedroom model that you can see here. It's a little bit bigger, just under 1,500 square feet. Those are from 280 and up. You get the extra bedroom that way, and because of that, they're renting for $2,000 a month. Again, 13,800 available incentives. You've heard me talk about the available homes. You've heard me talk about Express Homes, which is the builder of these homes, and we've had a really, really good partnership with them here for a couple of years, and they've done great work for a number of investors. Very reliable builder. Let's get into why Labelle is so exciting right now, and it is that there is incredible demand and absolutely no inventory available to rent. You'll see here, I actually pulled this screenshot 5 minutes ago, right before we shot this webinar. There are 2 homes available for rent on the MLS right now. So the multiple listing service here in Southwest Florida. You can see there's this home down here. It's renting for $1,950 a month. There's no garage on this house, so not even really comparable to the house that we would be renting. And then another one up here, they're asking $2,400 for that house. It has a 1-car garage. I mean, in my opinion, those rents are way too high, and that's why those 2 properties have been sitting there for a little bit. But there's only 2 homes to compete with on the MLS. Let's look at Zillow now too. Again, on Zillow, there's really 2 homes. These 2 dots over here, they're 1-bedroom apartments, very close to the downtown area. They simply do not compare with the single-family home we'd be renting out over here. You have this one here. That's the same home that I showed you at $1,950 per month. It has no garage, so it's really just not a very good comparable house to ours, which has 2-car garage. And then this one up here is $1,600 a month. It's at least a 25-year-old home, and it has not been touched in 25 years. So again, not very comparable to our brand new homes that we'd be renting. And then the last one, this is on Facebook Marketplace. You can see you still have those 1-bedroom apartments over here, which are simply just not comparable. They would not work for a family. This is a warehouse over by the airport. Again, it's not even a residential property. And then you have this one up here at $1,900 a month. That's finally our first actual comparable property that one of our homes would be competing with on the rental market. It's a very nice 3-bedroom, 2-bath with a 2-car garage, and they're renting it for $1,900 a month. Just went up recently, and I have to think that they would rent it out very, very soon. And I say that from experience. Our last 2 homes that we've rented in Labelle, the first one was vacant for 2 days. So tenants moved out on a Friday, and on a Monday, the new tenant moved in. It was vacant for Saturday and Sunday, and that was it. That was a home that we've been managing for a little while. It's a little over a year old. So the first set of tenants moved out, new tenant moved in, and there were only 2 days in between. We had another home that was recently closed on Friday last week. That home, we went ahead and we got it listed on the MLS. We got it listed on Facebook, apartments.com, rent.com, all the major sites. From Facebook alone, we had over 1,000 clicks. We had 19 saves. It was shared 5 times. I received 33 messages, and it took us 4 days to get all of that interest and get a lease signed by a qualified tenant. 4 days. So that home, from the day we closed to the day the tenants will move in, will have 7 days of vacancy. And then it'll have a 1-year lease. So, 1 year down the road, with our 7 days of vacancy, we're looking at a 98% occupancy rate, 2% vacancy. And that's if the tenants don't re-sign, which I fully expect them to do. Typically with single family homes, we do see that tenants will rent for 3 to 4 years before they leave. Same thing. The first home I talked about that had the 2 days of vacancy in between tenants. Once we combine the first set of tenants and the second set of tenants, we're looking at a 96% occupancy rate. And that's because we waited 3 weeks for the first set of tenants to move in. They were very, very qualified. We gave them a little bit of extra time to move in while we waited for their previous rental to end. If we go the day they moved in, add the 2 days of vacancy, and then where the next tenant would move out, we're looking at a 99% occupancy rate. I mean, these homes are rented all the time, which is great. And even going back to our oldest home in this market, it's actually the very first home I worked with Mr. Yee on. That home is currently at 100% occupancy in over 3 years now. Same tenant has lived there from the day the investor bought it all the way through now, 100% occupied. So let's get into why this is important, why having this much demand and this little rental inventory and these very, very high occupancy rates is important. So let's get to the numbers. What you can see here, we're doing, actually this information up top is a little bit wrong. This is the 4-bedroom, 2-bath model that I'm projecting. So there's one available, 272,505. They're currently running a special on that one. The market value is actually 283 if we were to resell it. So 25% down, we're looking at some closing costs. Those numbers are actually a little bit high. Once we take the incentives off of that, I would expect your closing costs to be a little bit lower. So total cash invested comes right in about $75,000. We're using a 4% appreciation rate, which is a little bit low for this area. If we look at the last 25 years, it actually averages out to about 9% appreciation year over year. So we're cutting that about in half for our projections to be very conservative. I used a 4% vacancy rate. Again, that's actually, as shocking as it sounds, that's high for this area, right? Our worst performing home in this market is at 4% vacancy, and that's on a 2-year history. Management fees, 2% set aside for maintenance of the property, and a 10-year hold period. Now, we rent it for $2,000 a month. Once we lose money for property taxes, insurance, the management fees, the maintenance, we're even assuming that we have to charge a leasing fee, which we only do that when a tenant moves out and we place a new tenant. If we renew the home, we don't charge that fee. Come up here to the top right and you'll see, even if we have very, very low cash flow, which really is not the case for these properties, and you'll see on the next slide, we're still at a 16% return on investment year over year, right? And it sounds a little bit crazy, right? Well, I only made $2 a month. How is that possible? Somebody else paid $3,100 a year in mortgage pay down, and over that time, the price of the home went up from the 283 that we started at to 402,000 because of that 4% appreciation. And what I want to show from this example is just how important it is to remember that on the long-term basis, even with very, very low cash flow, there is an enormous amount of money to be made simply from someone else paying that mortgage for you every single month and the property becoming more and more valuable over time. I mean, that's, you're making $118,000 on a $75,000 investment. That's phenomenal. On the next slide, I did just want to show one more example here. In this case, we went to that 1% vacancy rate, which again sounds very, very aggressive, and that is. I'm not saying every single home will do this, but I am saying we've certainly seen homes that have done that. It brings your cash flow up. You're making about $100 a month now, and that brings your total ROI up over 17% year over year. I mean, really strong numbers. And in this scenario, we're not calculating any rent increases over time, which also is not the case. Rent is from the very first time we rented a home in this market to this $2,000 a month, the rent's actually gone up $600 a month in this market, right? Originally, we were renting homes for $1,450, $1,500 a month. It's up to $2,000, and that's only in a matter of 3 to 4 years. If that continues over time, your cash flow increases more and more as we charge more and more for rent, we keep that vacancy very, very low and someone else pays off that mortgage for you each year. There's, phenomenal money to be made in this market, just from the rental demand and extreme lack of rental inventory. So something that I'm very excited about this market, and really hope we can get some more homes into our network pretty soon, because there's certainly a great opportunity here. Mr. Yee, I want to get your thoughts on that a little bit, as far as this concept of just minimal cash flow being okay, simply because someone else is paying off that mortgage for you for years and years at a time often.
Yeah, Justin. Yeah, my comment is this: as I've been telling our investor database this, and something that is a philosophy we all should have. Income property is one of the most attractive and most lucrative investments in history. It is a multi-dimensional investment asset class. It is a tax efficient strategy, and what you just said is not only about cash flow. By the way, you are projecting a mortgage interest rate around 6.5%, which is very realistic as of today, right? August 2022. But then the interest rate has gone down a few days ago, so that's a temporary advantage. But having said that, we need to expect in the next few years, we don't know when, a year from now, 2 years from now, 3 years from now, we have to believe that the mortgage interest rate will come down, and we have to believe that. And if that's the case, it's very easy for investors to, guess what, refinance the loan at a lower interest rate. Therefore, your cash flow gets better because your mortgage payment is lower. So our philosophy moving forward as of right now is buy now, capture all the multi-dimensional aspect of this investment property, like Justin just discussed. A little bit of cash flow, mortgage pay down by the tenant, equity appreciation, and tax benefits, all those kind of things. It gives you a double-digit return, as Justin just validated. So that's how it is, right? Right now is the best time to buy. You buy now, refinance later, and keep on invest for the long term, and you'll be fine. And so that's my takeaway from this. From this. All right, Justin, you may continue now.
Yeah. I think that's a very good point, right? The interest rate is high. If someone was to buy today and lock in a rate, it very likely would be lower than this. So there would be more cash flow. But besides the point, the biggest thing here that we're locking in, right? There's two things. One, it's this brand new, 3-bedroom, 2-bath, or 4-bedroom, 2-bath home, right? That's available right now today. Depending on what happens with supplies, who knows what could be available a year or 2, 3 years from now. Second thing we're locking in is that price, right? That 200, call it 275 price. We can pretend like we can predict the future and say, oh, that price will do this in this number of years. You look at it historically, on a long-term basis, the likelihood that you lock in a lower price down the road is not great, right? If I say, oh, I'll wait, 4 or 5 years and I'll buy it then, it's a gamble. Again, all of our products that we recommend are long-term holds, 10, 15, 20 years, and the likelihood that you beat that price down the road is very, very slim, right? That far down the road. So you lock in that price, you lock in that home, you get the renter in place, and when we can lower the interest rate, we can do so. And another thing that I've heard some whispers of, haven't heard anything official on them yet, but there's talks of the 40-year mortgage out there, which, if cash flow is that important and that product does in fact become available, extend out the length that you pay that over, it'll lower the payment and increase cash flow. There's there's lots of ways to improve cash flow over time. There's very few ways to lower a purchase price down the road. It's really a gamble there, lowering a payment. There's lots of ways to find ways to do that.
Yep.
So I mean, again, I think that the Labelle market is one of the strongest for an investor, just because of, I mean, that control of the market that we're starting to see. I mean, as we start growing this network of homes more and more, there's only so many homes being rented out there. The market is, the last time I checked, it was about 97% owner occupied. I think that's gone down a little bit since that's probably around 95. But I mean, when you're in a market where only 5% of the homes are investment properties, that's a great kind of market to invest in, because you as the investor have such a large market share. There's only so many homes you're competing with ever. Certainly it's an exciting opportunity.
Absolutely, Justin. Absolutely. Let me tell you from a high level. I studied this market for many years as part of my network. So the future is really bright into Southwest Florida. I mean, Southwest Florida has been in the top 5, markets by various media publications. We don't need to name, but let me give you one example. The city of Naples, Florida, which is like 30 minutes below Labelle, in this region. I mean, there's an upscale market is growing so fast. You have some really high-end people, retirees, upscale vacationers, upscale people moving to Naples. Just one example. What's going on with Southwest Florida, Cape Coral, Naples, Fort Myers, all the surrounding area cities is we project to see, massive population growth and job growth in this area, and the migration from Northeast New York City, New Jersey, people migrating from the Midwest, from Chicago area, and then people migrating from California, where I live, in the Bay Area. So you have a out-of-town migration. You know what? One more thing. Justin, I use a very unique software to track rental rates in any given neighborhood. It's called Rent-O-Meter. Rent-O-Meter is real-time tracking within a 2-mile radius. What are the rental rates per type of houses, like a 3-bedroom, 2-bath, within the 2-mile region? And I've been tracking Southwest Florida for the last few years. And what I noticed, Justin, is that the typical rental monthly rent in typical single family home in 3-bedroom, 2-bath, 1,300 square foot, 1,600 square foot, it has exceeded the $2,000 threshold. So this is a very important, at least for me, because several years ago, like 3, 4, 5 years ago, the monthly rent in some of these homes in this Southwest Florida area is like $1,400, $1,600. Now, fast forward a mere few years later, now the new benchmark, if you will, is $2,000 monthly rent in Labelle and in Port Charlotte and Lehigh Acres on this typical cookie cutter single family homes. But a few years ago, you would have told me these kind of properties are renting for $2,000. I would say you're crazy. There's no way this can happen this fast. Just going to show you the skyrocketing rents that are going on, lack of homes to buy, lack of homes to rent in many areas of the country, in particular Southwest Florida, Cape Coral and Labelle areas. So there's a reason why skyrocketing rents. People who normally want to buy homes cannot buy because of various reasons, including the interest rate hike and all that. People migrating not only from out of state, I've done additional research, Justin, and I'm sure you can validate that. A lot of people are being priced out from South Florida, from Miami, Fort Lauderdale. I mean, the rents there for 1-bedroom apartment is like $2,500. 2-bedroom single family home renting in Miami, South Florida, and Fort Lauderdale, those, are around 2,500 to 3,000. So people are migrating from one part of Florida, South Florida, into Southwest Florida for cheaper homes, cheaper rent. So we are getting migration from every directions, north, south, east, west, from in-state and from out of state. Yeah. So, I mean, the future is so bright, but the key is investors, you got to get in early. We're getting to Labelle, we're getting into a path of growth. At the early, all these years I've been promoting out-of-state properties, right? For my investors, all these almost 20 years I've been doing this. We always target, we always got to get in before the rest of the mass media hears about it. Suburban growth, the path of growth is inland in many parts of the country, especially in Florida. So Justin, Justin, you know what you're doing, because you have a pulse of the market. You know every street, every neighborhood, all the economic data in Southwest Florida. So you are the go-to real estate investment advisor, not only for my network, for other out-of-state investors. If you want a good short-term and long-term return, easy to manage, almost passive investing, if you will, and Justin, being the property manager you are as well, being as young as you are, you're going to protect our clients' investment for a long time to come, because as our investors, portfolio that are, in this market grows, you can grow along with them. 20 years from now, I have to assume you can be around, because you're very young right now. So it's very reassuring for out-of-state investors, no matter where you're located, California or Northeast or out of the country, whatever, knowing that you have a honest, integrity, great hands-on consultant, a one-stop shop that you have, Justin. You have everything in place, one-stop shop to manage our clients' great investment asset over time. It's very, very comforting and very, very good feeling for people to have the confidence to invest in your market now and into the future. So that's my that's my point of view. All right.
I want to go back, actually, something you talked about. That's the population shift inland. I want to show it on the map here, just to kind of illustrate it in Southwest Florida, because what you said is completely accurate. Naples, which is just off the screen down here, it's south of Estero, about 20 minutes. It's to the point where that's some of the most expensive zip codes in the country are in Naples, Florida, where homes are selling for 40, 50, 60 million dollars. I mean, incredible prices. And when that happened, the population shifted inland. So there's a neighborhood far to the east. It's called the Golden Gate Estates. You go back 20 years, you could buy a home there for $200,000. Currently, homes in that market start at $500,000, and there are homes over $1 million in the Golden Gate Estates, which was not a thing years ago. And what that did was now price people out of Naples. So what happened? Well, they moved further north to Estero. Well, Estero got quite expensive. There are a number of homes over $1 million here in Estero. So people moved inland again. So you can see these lakes here. These are very, very large neighborhoods, master plan neighborhoods by some large national builders, even all the way out here. Those homes, again, when they first started building, they were $300,000, $400,000, $500,000. And well, at this point, even these sell for over $1 million oftentimes. So, again, we price people out and people had to go further north. And same thing has happened, right? Cape Coral, even just a couple of years ago, you could buy a home for brand new home, $275,000, $280,000. At this point, the cheapest brand new home is $400,000. And oftentimes, down in South Cape Coral, well over $1 million. And it priced people inland further. Lehigh Acres, 5, 10 years ago, you could buy a home for $150,000, very, very low. Starting for a new home is 300,000 in Lehigh Acres. It's gotten more expensive. So again, people went further inland to Labelle. When you talk about getting in early, Labelle, as far as legally defined lots, has been there since the 70s. Right? So they put all the roads in and they subdivided all the individual lots, and there's land there, but there are very few homes until about 5 to 10 years ago when builders caught on and started building there. There are still, I'd say 25% of the streets that don't have the power lines installed on them yet. So the builders can't build on those streets. So when we talk about getting in early, this is it. There's still roads that the builders can't even get to, right? This is early. This is getting in on the ground level of this market. I'd say within the next 2 years or so, all the power lines will be in, all of the lots will be available to the builders. It's growing very quick. When I drive through there, every street has 1 or 2, if not more, new builds going up. So it's certainly the time now to get in early, get into that rental market where there's very little competition, and truly see a very, very successful long-term investment. It certainly has a huge amount of potential right now, and it's very exciting to see.
Yep, very good, outstanding. So where are we now?
Yeah, and really, my kind of the final thoughts on it. It's a market with availability, and really availability, some of which can be closed on very, very quickly. There are a couple of homes that are available in August and September.
So everything is very exciting. All the data, all the trends, all the metrics are really in alignment. So really, when we cover all the bases, so investors out there, if you're listening, we're just giving all the real data, down to earth data, down to the core. So our goal is to make investors confident in their action plan, and Justin, you have done a great job of educating and informing our investors to allow them to make an informed decision based on their own information. So yeah, everything sounds great. The short term and long term is very, very attractive in the market, and for any investors to have the capacity, to have the capital to put 25% down payment, regardless of all the challenges we hear out there in a real estate world, it does not matter, right? The economy, the inflation, the whatever negativities, all the misleading negative headlines we hear out there, investors need to block out the noise and focus on your action plan. Invest in a market you have the confidence in, work with the team that you like and you trust. In this case, Mr. Justin Zawodny from Southwest Florida. What more can you ask? I have, you have my total endorsement. You're one of our networks that's the most trusted turnkey provider. Although we have other markets we promote, but to be honest, I love your market for all those reasons I discussed, and I'm looking forward to for you helping more and more of our investors continue take action in your market, and so see their wealth increase over time, create generational wealth for themselves and their families and into the next generation. And that's what your product, that's what your market, in my humble belief, can do. So you have a final recap for yourself before we conclude?
Yeah, like we've discussed, it's Labelle is poised moving forward to be one of, in my opinion, the best markets in Southwest Florida to invest in. Purchase prices are the lowest that we see across the map, really. the rental demand is incredibly high, which we've seen from several examples recently, and the amount of rental competition is incredibly low. So it's really, really set up to be an excellent long-term investment as that market continues to grow and the population continues to move inland. And just really exciting, to see and excited for the investors moving forward. I can't wait to see once we hit year 10, 15, 20, just how well these homes have performed, because I think there's going to be some truly incredible success stories from some of these early investors.
Yep, sounds great. I'm in total concurrence. So thank you so much, Justin Zawodny from Southwest Florida, turnkey provider. Thank you so much for this presentation. Have a nice day, everyone. Thanks for listening, and I will see you guys on the other side. Have a nice day, everyone. Bye-bye.